Welcome to Breaking Banks, the #1 global fintech radio show and podcast. I'm Brett King.
And I'm Jason Henricks. Every week since 2013, we explore the personalities, startups, innovators, and industry players driving disruption in financial services.
From incumbents to unicorns, and from cutting-edge technology to the people using it to help create a more innovative, inclusive, and healthy financial future. I'm JP Nichols, and this is Breaking Banks.
This week on Breaking Banks, we travel down to Cape Town, South Africa to meet with the team at Crossfin and the team at MyPinPad, talking about next generation financial services infrastructure emerging from South Africa and extending across the planet. So Crossfin is a private equity company, investing in companies around the world, but based in South Africa. We went to their annual conference in Cape Town and sat down with a couple of their portfolio companies. The first we spoke to was Barry Levitt, the founder and CEO of MyPinPad, and a soft POS technology that we're going to get into. But we'll also meet with the founders of Crossfin and talk about their investment philosophy and what's happening in the space in sort of next-gen financial services and where they see investment going. Then next week, we're going to interview a couple more of the portfolio companies. So join us in Cape Town as we dive right in. So we are in Cape Town and caught up with Barry Levitt. Barry with MyPinPad. First of all, for the audience at Breaking Banks, just tell us a little bit more about yourself and how you came into fintech. You're based in Singapore, I understand.
I'm based in Singapore. Part of going into fintech was a personal mission, which was, I'd done the corporate thing. I looked at technology. I was catching up with technology a great deal. And it was one of those passion projects where, if you don't do it, you won't know. So give it a go. So I founded a business called Smart Peso, which was based in Singapore, which is looking very much at financial inclusion, Southeast Asia focus, but expanding into Africa. But really wanted to develop, the product from scratch.
Being the Swahili word for money,
correct.
From M-Pesa.
Yeah, correct. Yeah. So built that up, expanded into Southeast Asia, but also expanded the product set. So starting, with basic M-POS for card payments, but actually extending out into things like agency banking for financial inclusion. Particularly in parts of Africa and Philippines. So there was a mission element to it, which I think is very important to survive the cycle times. Through that journey, this innovative thing started coming up called soft POS, which is really about that mega trend of financial towards mobile phones.
So just explain it a little bit more detail. If you haven't heard the term soft POS before, don't be afraid. But what is a soft POS?
So
a soft point of sale terminal, right?
Yeah, it's exactly a point of sale terminal. So the everybody knows going to a shop, you take your card out and you insert, you tap it,
on the machine,
and you go through, etc. Those terminals are certified under PCI, and there's a whole lot of regulations around it. The idea around soft POS is to leverage the power of just an ordinary, standard consumer grade mobile phone, but to accept payments in exactly the same way.
Okay, so you turn your phone into a point of sale.
100%.
Okay.
So as you can imagine, it's not designed like those other terminals to be a point of sale device. So a lot of the innovation and so on is really around securing that device. It's not designed to do payments. So there's a lot of technology and innovation that we have to do to try and make that secure. So we become, kind of experts in the security aspect and not just the payment processing aspect. So there was a leverage of, a bunch of different skill sets within the teams as we developed the software. So over time, we developed this business, Smart Peso, and we had this competitor that we kept coming up with, which was named MyPinPad.
Oh, so this was the hardware-based devices like what Square had and iZettle had, where you plug it into your phone, was it? Or
No, my PinPad was a competitor company, but they were also very much going on the soft POS trajectory. And so in a few years ago, it was a case of, well, if you can't beat them, join them.
Okay.
So we actually put Smart Pesa and my PinPad together
Oh, okay,
in 2022. So it was a merger that happened. And we think following that, we ended up with a much better product for customers. And we think, probably got the leading product as a result of that merger. It was a great combination. It was a very successful merger. Quite often mergers don't work. But following that, I took over as CEO of the combined group, which was then trading under the name MyPinPad.
All right, so to understand sort of some of the tech behind it, and I don't want to get too technical, I guess, but compared with these certified point of sale terminals that we get sold by Network Solutions and these various companies around the world, if you're turning your phone into a point of sale, obviously there's an NFC reader in the phone. That's why you can tap NFC business cards and things like that to it. But what is required to allow your phone to become a point of sale that's different from just using the NFC chip? And so, do you need to access a secure element? What sort of integration are you required with the networks and the schemes?
Yeah. So where the payment card industry has been quite good, so-called PCI, is they've written a number of standards which are very security focused. So they've come out with a number of standards in this space. They started out with what they called SPOC, and then it migrated into CPOC and the later variation, which is MPOC, which stands for mobile payments on COTS. COTS means just a regular device. And within that, there's well over 100 pages of requirements. And it's all around securing the information for the cardholder. How do we make sure that at the time of tapping that card, that device is as secure as possible? So there's a lot of aspects.
I mean, how do you stop someone from just taking their phone and putting it in POS mode and coming up and scanning your wallet, for example?
So we're detecting, there's a long list and we shouldn't say everything, but we're detecting for routing, for developer mode, for hooking, for eavesdropping on the phone. We're looking for side channel attacks. We're looking for a number of different things before a transaction happens and during the transaction, as well as during
remembering that the user still has to authorize it on their phone, even if it's with your phone as a POS, right? Or PIN.
So they can use PIN. So primarily they would end up doing PIN entry on the device, and that's when things have to be really, really secure. Right, because the PIN is
okay. So if I tap my phone to your phone, I'm still going to have to enter a PIN on your phone if it's acting as the POS.
So you get these different modes. So if you do the tap phone to phone, quite often you can get you can get the authorization on your phone. So that's one mode of working. But for a lot of people, particularly with debit cards, they're not using the Apple device. They're just using like plastic debit cards. They're not having the confirmation back to their phone. They'll go back into a PIN entry. So exactly the same experience that they would get in a shop. But, they would tap into a machine and it would come up, please enter your PIN and go. So it's the same experience, but it's been done on a mobile phone instead.
Okay, so where's this deployed right now? Where have you got this tech deployed? So where can people accept phone-to-phone payments?
So we are deployed literally all over the world at this stage. So we've got New Zealand, Australia, various places in Southeast Asia, India, several countries in Europe and so on. But where things are really taking off is in Latin America, particularly Brazil.
Oh, okay. Is this integrated into PIX? Is that for the PIX rails, or is it just on the typical card rails?
So this is all card rails.
Okay.
So this is card rails, which is Visa, MasterCard. But if you take, for example, in Brazil, what's really quite big there is You get these private networks there. It's called ELO.
Yep.
So we support those as well. In places like India, again, we tend to try and support everything. So we'll support Visa, MasterCard, and the international brands, but also support RuPay, which is quite big there. The PIX or the local, those are run on different rails and such like. Generally, what we see is they're complementary. So the micropayments will tend to go across the newer, rails. But when it comes to larger payments, what we see is a much higher average ticket size across these our transaction histories than people would have expected. 10 times what people actually were forecasting, because the type of purchases that are being made across the card rails tend to be those premium items.
Okay. So does that mean that on the soft POS it's generally smaller transaction size, or is it just comparable with typical POS? It's higher. Okay.
It's higher. Yeah. So but it does vary between markets, quite significantly between markets. If and there's some segmentation. When I say it's higher, it's how much higher than people expect. But if you're comparing it to going to an Apple store or something like that, then obviously their ticket size is much, much higher. But it would tend to be items where there's some bundling in a large single transaction. What was forecasted when there was speculation around this market would be the average ticket size would be something like $6 or $7. And the actual reality is like 10 times that. So what we're seeing is the mix or the use case for soft POS to actually be a lot more value adding because of the software channel than it is, it's just cheap POS, right? That was the original pitch. It's just cheap POS. Whereas what we're finding, and particularly some of the use cases such as delivery, is you're getting very high ticket size because that integration with the rest of the systems is so important. Right? If you're a delivery company, it's very hard if you've got a payment terminal through one system and you've got your software in a different system, and then you've got an integration problem, a reconciliation problem. So this is why you're driving a lot of these high ticket values through soft POS, is because you get natural integrations. So it's a bit of a surprise, less so to us. We somewhat expected that, but we were quite early in the delivery market, so we saw some of this trend quite early.
So do you think of QR codes as your primary competition, or particularly in Southeast Asia, or do you co-opt that sort of infrastructure as well?
The macro trend is towards open rails. There was an explosion, particularly in Asia, of QR codes and wallets and so on. That has died down significantly, and it's got brought back into one or two players, typically Grab, Alipay,
Sure.
So it's one or two.
Prompt Pay,
but it's not massive, and even those, they end up being backed by the card rails anyway, because it's Visa, MasterCard, and so on in the background. It's died down significant. What we do see is a reversion back to open loop. Particularly card rails, there's a lot of benefits to it. But we're also seeing innovations of use case where the card is not just used for payment, it's used for identity, verification, proof, and so on, particularly with things like payment authentication, what we call tap to verify. A large bank transaction happens, we do this in Canada, a large bank transaction, and they say, it triggers a risk. And you say, okay, well, let's use our technology, a tap and a PIN, to really confirm so that we can reduce that transfer risk. And that's for a bank transfer. What we're also seeing is, on the back of those wallets is, there's Grab. It's a Grab wallet, but it's backed by a card. How do you get the card into the wallet? So the technology is now being used. Same technology for soft POS for provisioning that card into that wallet. So what we're seeing is kind of lesser competition, as more of an alignment of these different channels towards sort of a interoperability, and with that innovation around taking this sort of ubiquitous technology, the soft POS technology, into a lot of different areas. so-called, tap to everything as Mastercard
Tap
puts
to everything. Oh, that's interesting. All right, so one last question, well, maybe a couple last questions, but so do you act as the acquirer, as a merchant acquirer, or are you powering merchant acquirers with this?
Yeah, so we what is called a solution provider. So we provide the technology, the certifications, the security, all that part to our customers, which are typically large financial institutions or e-com providers. We've got a number of e-com providers, also customers. What we said to all our customers, we're not going to compete with you. We're a technology provider, and we'll provide to anybody that wants it around the world. So we have chosen not to go and become a PF or acquire ourselves or anything else like that. Purely, we specialize in solving the hard problem, which is that technology problem.
Great. So you've got good expansion going, got some good scale. Tell me, just to finish up, what are your plans for the rest of the year? Have you got some big plans in mind? Are you fundraising or something? And how can people find out more about MyPinPad?
Yeah, so we've just completed, or in the last rounds of completing a fundraise, which has gone very successfully. We think this is the last that we need. We've seen phenomenal growth over the last year, more than doubling of volumes. We've hit 1 million merchants on our platform. We've seen SoftPOS gone mainstream. It used to be somewhat of an experimental. Now what we're seeing is significant inbound inquiries. It becomes something that any payment service providers needs to be on the plannings. I think where our focus is continues to be about having a very fast transaction time, and we're working quite hard on the product side, and a big part of that is to just smooth that onboarding experience. Very, very, very slick SDK with good documentation that's almost pre-done for the customers. Right. We're trying to take on as much of that technical complexity for the customers as possible, and reduce some of their operational risk. So we're in that sort of game. It's a proven technology at this stage, right? We're just trying to really make it fly.
Well, Barry Levitt from MyPinPad, thanks for joining us on Breaking Banks.
Thanks so much for having me.
This show is brought to you by Alloy Labs. As much as we love talking on the show, we believe that action is more valuable than talk. Alloy Labs is the industry leader in helping fearless bankers drive exponential growth through collaboration, exclusive partnerships, and powerful network effects that give them an unfair advantage. Learn more at alloylabs.com. Alloy Labs, banking unbound.
So I'm in Cape Town, South Africa right now for the Crossfin, what are we calling it? The Crossfin
Circle of Fintech.
Circle of Fintech event. I'll let you guys introduce yourselves. You're both founders of Crossfin, I guess, right?
Yeah, that's right, Brett. So I'm Dean Sparrow. I'm a co-founder alongside Anton of Crossfin. And Crossfin is a broad fintech investment platform based out of Africa.
So not a lot of people really appreciate the depth of change that fintech and mobile money and et cetera has thrust upon Africa. We're going through some of the numbers today, that 70% of mobile money activity, mobile money accounts are in Africa, on the continent, and 1.1 billion Sub-Saharan Africans have come into the financial services system through fintech and through mobile money in just the last decade or so. An amazing turnaround, because these were considered unbankable, these people in the past. But let's talk a bit about the infrastructure that's been built over the last few years. Tell us about what is different in Africa for fintech, and what's Crossfin working on? What are you guys investing in?
Shall I start with what's different?
Yeah, go for it.
What's different in Africa was there wasn't a large formal legacy banking infrastructure in the past, and telephony was difficult until the advent of mobile. With mobile coming in, even before smartphones, you got a pervasive way of people accessing and communicating with one another and communicating with one another. And on the back of that, the telcos realized that they could actually leverage the network to enhance financial inclusion through mobile wallets, and actually even other interesting solutions where people were trading sort of off airtime.
Yeah.
As a means
Yeah, the airtime
of
trading stuff sort of started here, didn't it?
barter or exchange. And that just got very pervasive without a very tight financial sort of legal framework or infrastructure that the banks were very rigorously trying to control and protect around money and exchange and all of that. The mobile operators kind of invented this mobile wallets and these other forms of transacting. And, you know, as soon as the average African realized that this was a way that they could trade, it just took off. And it grew pervasively. And to date, the mobile network operators have the largest mobile money wallets and businesses.
Right, so you know, Safaricom, Vodacom in Kenya and Ghana, MTN Money in Nigeria. This is sort of where it happened. It's interesting, isn't it? Because we knew that telcos had that potential, but in the West, because you have these sort of fragmented markets in terms of penetration, and the telcos wanted to dominate, then they missed the opportunity entirely. But in the markets where mobile money seems to have worked very well, it's where one telco has sort of been quite dominant in that market. Is that a fair assessment?
I mean, I think it's definitely fair that the telco positioning and the accessibility to the consumer, which wasn't available more than 15 years ago, has been a big driver behind that. And it is true. It's created that accessibility for the consumer previously that did not have access to your kind of basic financial service requirements, that they now have that in the form of typically a mobile wallet, mobile currency and capability. And so that's definitely spun this whole economic reality that's different to, let's call it, the traditional world. However, in that sits another interesting dynamic, and that is that you still have this, and it's a big drive behind one of the things that Crossfin looks at opportunities to invest behind, is that how do you create the scenario whereby mobile money and all the wallets that are out there in terms of currency and capacity to transact can actually engage seamlessly with also the traditional landscape market. So that ability to build the bridge between mobile money, mobile wallets and currencies and traditional banking, card rails and the like is something that in the African community, I think is...
So how does that happen here, like in Africa? Like, what are the best examples of that where mobile money's come in and then there's been a collaboration with the traditional financial services layer?
So I think one of the examples that we've seen definitely happen is that at the point of acceptance, typically, where traditionally that point of acceptance, if we went right back in time, would have been pretty much cash orientated. That cash evolved to more digital card related transacting. That's now evolved into the ability to effect a mobile payment with a mobile currency and wallet. And it comes down to the ability at the point of acceptance to embrace multiple types of payment, which include mobile wallets and mobile money.
And it's extended. So it started in the more sort of informal sector, adopting wallets. And really on the back of the fact that there wasn't a lot of legislation from a bank regulatory perspective. But as smartphones have become prevalent and they really grew across Africa, so it's moved up to the upper incomes where the actual card-carrying banked consumers have been able to add their card to wallets, etc., and starting to tap to pay and leveraging basically your mobile phone as the point of acceptance. Because of all the work that was done to integrate the phone transaction to the traditional point of sale, or even going to a retailer and be able to deposit cash directly into your wallet or into your card through a retail channel, because in Africa there are not that many branches of banks. So they've had to reinvent themselves and either have branchless banking and leverage the retail footprint or the ATM footprint to get money in, or agents, where they put agents out in the field to go and collect cash and get it into people's wallets. Once they've digitized it, things just started taking off.
So this has not only created financial inclusion, but it's created more financial stability, would be my guess, right? I mean, I know I've heard of people in Kenya, they used to put their SIM cards in their socks and stuff like this because, cash theft was a problem. But generally speaking, we're talking about some pretty positive financial effects. There's more savings and so forth. But let's dive into Crossfin a little bit. What do you guys do?
So, our focus is very broad in its kind of mandate, and that is looking to invest in all fintech-related opportunities. On the continent predominantly. It's in Africa, starting out of South Africa, which is really where we originated out of. And if we look at the portfolio today, it's arguably 60 to 70% payment orientated. And in the payment orientated investment, it's largely to do with the fact that there was a large proportion of the population that sat with some means to transact, whether a card or a mobile wallet. But the acceptance landscape was very young in its making, and therefore the points of presence at which a consumer could legitimately transact with either a mobile payment or a card was limited. And so a lot of our investment activity and focus has been to identify businesses, generally founder-run, owner-managed businesses that are well-positioned in a particular market set with a focus, and put in a bit of capital back in and some support and infrastructure around them to enable them to go and kind of ratchet up their business proposition.
Yeah, a good example of that is platforms that have integrated to retailers to enable payment acceptance at point of sale, mobile POS businesses like eKhokha that enables mobile acceptance, actually having in the original days building out their own widgets to be able to accept EMV chip and PIN, because in the early days that wasn't prevalent at all. But these entrepreneurs, they found ways of building these, and then that's evolved over time to soft POS, where you don't even need the widget anymore. But this thing has had to come over a period of time as I've worked with the.
So you're talking like the pluggable card reader and like Square had in the early days.
Yeah, so it was one up on Square. Square had just launched, but in South Africa you needed to accept a PIN. Right. So you needed something that could, EMV compliant chip and PIN reader. So they actually developed that.
Wow.
Got it certified and got it to market. But then over time they've actually then moved off their own device because it became quite prevalent when all the other businesses across Europe, Zettel and the others came to the fore, and you could actually purchase these devices a lot more cost effectively offshore, and they could just focus on creating the solution that's best for the merchant. And then sourcing whatever device was relevant at the time. And now they've actually developed their own soft POS technology to say that we don't even need this device anymore. And so any software business that's focused on enabling payment services infrastructure or payment solutions to consumers or merchants, and then layering, because now it's financial inclusion, layering products and services above the payment rails that really start making things more relevant. Because with this digitization of cash in the informal market, we've been able to start getting a record of trading history. On the back of trading history, you can now start providing funding, which doesn't necessarily need to be secured, because it's actually, it's on the back of they're your client that you're already acquiring, card turnover from. So there's a sort of a net settlement type opportunity where you can secure the funds before paying on. But you also have a proper see-through of their trading history, which gives you confidence to provide some kind of cash advance against their trading. And that then enables them to grow their businesses, because traditionally, without formal banks, there was no way of getting funding to build a business, particularly in the informal market.
Tell me about some of your more successful portfolio companies that you've got here that have really made a difference in Africa.
I think it's probably Retail Capital, which we've subsequently sold into the Time Bank, was definitely one of our more significant investments. It's literally carrying on from what Anton just shared. It was a business that had identified if it had access to real-time data related to the transactional activity of the merchant, they would be able to pre-approve advances linked to the revenue streams of that merchant. And we saw that business's book from the time we got involved in it around 2019 to the time we exited, which was around about end of 2022, we saw that book go almost 4 or 5-fold in terms of just advances in the demand in the market. And I think that was a proposition that added a huge amount of value, not just to the business and its shareholders, but actually the base of merchants that had traditionally not had any access to funding. So that was definitely one of the highlights. And I'm going to pick up on another one.
A more recent one is a business called My PinPad, which provides the soft POS technology infrastructure for any acquirer that wants to provide that kind of payment solution to their base.
And so then they can just accept NFC payments on the standard smartphone.
You integrate their My PinPad SDK into your app, and suddenly it becomes an acceptance device. But it's expanding now into e-commerce, where on the consumer device, they can tap their card to authenticate a transaction, which becomes card present. You can also tap to add, if you want to just add your card and tokenize it into your app or your wallet and all that kind of technology. And we thought initially it's going to take a while for this to take off in Africa because you need the NFC compliant smartphones, but the technology was really exciting, and it will become very relevant as the African smartphone population sort of becomes NFC compatible. But it really has taken off in South America, which is an amazing use case, which we hadn't planned for.
That's cool.
But clients like Nubank, Mercado Pago,
it would work for Pix, great. Yeah. All right, so let's, before we wrap up and start talking to some of your portfolio companies, what about the role that AI is playing on the continent? Because we hear a lot about AI in the States and in China and, debate in Europe and so forth, but is it starting to impact on the continent here?
Yeah, very much so. So, I'll reference another portfolio company that we are invested in, a business known as Sparrow. Sparrow has got about 90 banking clientele across the African continent, and they're engaged historically largely at the infrastructure layer of those banks, enabling them to effectively embrace new generation front-end technologies like digital onboarding and the like. And what they've found is that if they were not embracing AI as a means to assist them in terms of expanding the capacity, they just didn't have the means to be able to service the client demand that sits on the continent. So that's probably a simple example.
Scaling capability.
Yeah, scaling capability.
Yeah. Scaling AI, all of our fintech portfolio businesses have started leveraging AI to make their internal businesses and systems more efficient for now, and then starting to leverage it to learn more about the consumer and the merchant to add additional value propositions on top. But everyone is thinking about AI in some way, shape or form.
So from a regulatory perspective, in terms of this new layer of financial services, and from an investment perspective, what would you say to people listening to Breaking Banks around the world about what's happening on the continent today?
There's a lot of energy and investment going into revolutionizing traditional banking systems and solutions across the continent. There's a lot of thought going into taking the friction out of cross-border transactions and reducing the costs, particularly on remittance. There's huge corridors for remittance, but the current incumbents charge far too much, and it's not positive financial inclusion. So there's a lot of people looking to sort that opportunity out. There's also very much a trend towards enabling central banks to have more sovereignty and control over their own internal payment systems, whether it is instant payment type solutions or their own potential card type programs. And then how to network those across Africa to provide proper interoperability.
Yeah. Well, Dean and Anton, thanks for joining us on Breaking Banks today, and we'll stay tuned. And we're going to talk to some of your portfolio companies to find out about what is happening on the ground in Africa and the sort of fintechs that are emerging here. But thanks for your time.
Thanks
today.
very much, Rick.
Thanks for your time. Appreciate it.
That's it for another week of the world's #1 fintech podcast and radio show, Breaking Banks. This episode was produced by our US-based production team, including producer Lisbeth Severance, audio engineer Kevin Hersham, with social media support from Sylvie Johnson. If you like this episode, don't forget to tweet it out or post it on your favorite social media, or leave us a 5-star review on iTunes, Google Podcasts, Facebook, or wherever it is that you listen to our show. Those actions help other people find our podcast, and in return, that helps us build an audience that can be supported by sponsorship, so we can continue to provide you with our award-winning content every week. Thanks again for joining us. We'll see you on Breaking Banks next week.